Hey folks, Dan Frio here, the rate update. Today is December 17th, 2021. We're going to talk about fleeing to safety, what that means and why it might be helping mortgage rates. So don't go away, we're going to talk about that next. Real quickly, I want to talk about what does fleeing to safety mean, and you might start hearing that right now. Fleeing to safety means a lot of times in the stock market, people look and say, well, yeah, I think things are overvalued, or there's havoc in the economy, or there's worldwide issues. We got all of them. Okay, so you're seeing this morning the stock market pretty much, I won't say crash, it's down like 500 points or so. Normally when that happens in a normal market, you'll see stocks, if stocks are going up, bond prices are going down, okay? That's just how it works. Fleeing to safety means, we got issues. I'm not really seeing that stocks are my good investment right now. I'm a little scared. The world's in turmoil, oil prices are skyrocketing, inflation's out of control, all this stuff is going bad. So why would you buy stocks? Okay, so people start selling stocks and they're fleeing to safety. They need some yield. They don't want to hold their money in cash because cash it's actually losing value based on the inflation rates. That's a whole economics 101. So what'll happen is people won't just sit on cash, they'll buy bonds. One particular bond they might be buying is mortgage-backed securities. So when there's more demand, the demand is there for mortgage-backed securities because people are pulling out of the stock market, fleeing to safety. We're seeing a little reprieve in what's going on with mortgage rates right now. So let me go over this. Let's first talk about where stocks opened. Let's look at the markets and then dissect all this. So let's get my head out of the way and we're gonna go on. Here are where mortgage rates opened today. So it means where they ended last night. So let's go over that real quick. No major changes here. And after the Fed announced what they're going to do on Wednesday, I thought we were going to see basically kind of a crash in this market, but we haven't. Is it out of realm? Not necessarily, but I think the stock market's going to help us a little bit right now because I think things are pretty overpriced in the stock market. So let's go over what we're seeing rates open today. The 30-year fix is 3.16. Yesterday was 3.18. The difference is 0.02. And then when you dissect that, or how we phrase this, this is our terminology. Rate right now is 3.16. Yesterday is 3.18. The change is 2 basis points. Okay, so that means 0.02 and 2 basis points. So 3.16, 3.18, down 2 basis points. Okay, that's our terminology. So get with the lingo, guys. The 15-year 2.52 was 2.54. The change was 2 basis points. FHA/VA, no changes there. That's not really moving at all. The jumbo is 3.07. Day before is 3.08. Change of 1 basis points. And the 5-year ARM, as volatile as always, is 3.37, up 4 basis points. So please don't do an ARM if you can get a lower 30-year fixed rate. Why even have the risk? Okay, so guys, these are not my rates. Okay, these are generic rates, and why I do this, I want to just show consistency with you guys. So I follow the MBS market. I follow whatever it's established there on MBS Highway. That's how I follow the mortgage-backed securities market. And then how I follow rates is Mortgage News Daily. So the reason why I do those is people say, Dan, why do you follow the MBS 2.5 and why do you do this and how those rates aren't solid and so forth. Guys, I just want to show you consistency. If I went every day kind of like mainstream media does and just picks spots, I can kind of manipulate you guys into thinking whatever I want to think. But if I show you the facts and I show you the same consistent data day after day, then you can see the patterns there. Okay, so don't inundate yourself of, hey, why the rates can vary. They vary from 3% to 4 or 5% or whatever. I get it. But we want just consistency, that we're just taking one cookie cutter item and every day we're focusing on what is going on with that. So I hope that makes sense to you. So that being that, let me get my head out of the way again, and we're gonna get into this. The next thing is, what's the news for today? Okay, so one of the biggest things is inflation. So let's focus in on where the inflation we're seeing the most of. Okay, gasoline, and you can't see this chart because of my coding, but gasoline, the price raised from last year to this year, the differential, it's up 58%. Used vehicles up 31%. Hotels up 25%. Meat, poultry, fish up 13%. Look at the biggest move. It's gasoline. Okay, so let's just dissect, and I just did this for my curiosity. Here's how much oil the U.S. is pumping. Okay, you can see back in the heydays, really nothing. Then back in 2008, we started increasing production all the way up. And then it kind of crashed. No, I won't say crash. It dipped. And then from 2016 all the way through 2020, we had huge increases in oil production. We went from basically, let's say, 8,500 barrels or 8.5 million barrels a day up to 13 million barrels a day. And then we've come off of that peak. Guys, I get it. We want green energy. We want a clean earth. We want everything else. You can't make that move like that. So I don't know if the government is like, you know what, if we reduce our oil pumping, I'll put it that way, it'll force oil prices up, gas prices up, and then people will say, hey, I might want an electronic vehicle. Not political. I'm just telling you when I saw where the biggest increase in inflation came from, it was gas. So that's why I jumped into this. So just a little more information for you guys out there. All right, so let's go on. How is all this affecting the markets? We're going to get to that right now. The MBS market is up 13. Okay, so again, what I think people are doing is they're selling off of the stocks right now and they're moving into bonds. And mortgage-backed securities is a bond that trades on Wall Street. So let's focus in on this point right here, guys. What is this? It's a mortgage-backed security. It is the instrument, I'll put it that way, or it's the bond that trades on Wall Street that is the biggest component of your mortgage rate, the yield on this bond. Okay, so as the price goes up, and in this case it did, the price goes up, the yield goes down. Okay, conversely, when the price goes down, as you can see down below, rates are going up. Okay, so we've had a increase in rates over the last month and a half. Okay, now we're coming off some of those bottom levels. We should pretty much stagnate right through this area. Why? Well, a lot of the technicals I follow give us that, but the economy, the world, everything isn't going on technicals right now. I hate to say it this way, everything is determined on what the Fed's doing. And that's not a good policy, or that's not a good investment strategy, because we don't want the Fed to have that much control over things. All right. So the next thing we want to get at is where we are right now. The economic news for today is Bank of China is coming out with some announcements. Don't really care. Swiss National Bank rate decision yesterday. Don't care. You know, all we were focusing on yesterday is the housing starts and the continuous jobless claims and so forth. So today there's really no economic data in here that really should push mortgage rates one way or the other. What we're seeing so far today intraday is a nice rally. Look, I'll take that. All right, anything up, I'm happy with. Okay, so that's what's that. So that's my kind of overlay of what's going on with mortgage rates today. So if you're in the process right now of getting a mortgage, the mortgage lender, I'm going to say this every day until everybody and their mother starts sending me their loan estimates so we can at least review it on your behalf. I joined the largest mortgage brokerage in the entire country. We have, and I'll revise this, over 130 lenders that we work with. Okay, we compiled that data the last few days. There were a lot of companies that we got rid of. They just weren't serving our purposes or your purposes. So we have over 130 lenders to shop for you guys. So what do we do? So if you're in the mortgage process right now and you're working with a lender, please email me your loan estimate. Okay, the loan estimate has to be given to you guys within 3 business days of pulling your credit. It's going to go over the loan amount, the appraised value of the house, and it tells you every penny on where every penny of that loan is going to. Okay, I want to review that. You might say, well, my rate's fine. Well, how much in fees are you paying? Or you might say, I'm paying no fees, but your rate's too high. So let's look at it. It's free. email those to LE for loan estimate, LE review at therateupdate.com. If you're in the process right now, you're building, buying, refinancing, you're in a forbearance, you just have questions, how do you reach out to us? Well, the easiest way to do this is just go to therateupdate.com, okay, and give us a call. Okay, it's as simple as that. Call us at 1-844-775-5626. Now, yesterday I talked about 10 people and they're like, oh my goodness, you actually answer the phone a lot sometimes. I'm here, guys. I'm here all the time. So if you're talking to a loan officer here and you're like, hey, I just want to say hi to Dan, please, they'll come in and they'll talk to me. If you're talking to a loan officer, make sure they're with the Frio team. That's all I ask you, okay? Because there's a lot of impersonators out there, especially on YouTube. So if you're in California or on the West Coast, we're in the Midwest, and you're like, hey, by the time I get home and I'll watch your videos and I try to reach out to you guys, you're closed. What can I do? Well, schedule a meeting. You just click this button. It'll notify us that you're interested in a meeting with us. You'll pick the day and time. We'll then reach out to you and say, how do you want to do this? By phone or by Zoom? Whatever way you want to do it is fine with us. So that's probably the easiest way to do this other than calling. If you're like, dude, I just want to start my application because I like what you're doing. I need you to shop me around and get me the best deal in town. Just click here, click the apply now button, and you're on your way. So that's it for today, guys. I'm going to take a half a day today. Got to do some Christmas shopping and some other things. So I will be back first thing Monday morning with my rate update and to give you guys up to speed on what's going on in real estate. So thank you so much for watching. God bless. Have a great weekend, guys. Take care. Bye-bye.